Hi, I'm Julie and this channel's Happy on Monday. In this video, I'm going to share what IRA CDs are and their pros and cons. Very recently, I looked seriously into purchasing an annuity through my work. There was one with a lifetime yearly 3% COLA. It seemed like a really good deal. I'm so afraid of risk, and this was guaranteed lifetime income. But I did the math. If I purchased a $90,000 annuity and lived until age 90, I would receive $278,280 over my lifetime. Then I calculated what I would get if I invested that same $90,000 over that same time period at just 5% interest. That amount came to $467,024. But I don't like risk. My high-yield savings account and CD accounts are both making around 5% right now. So I thought maybe I should just put a bunch of money in those. So as I was researching it, I ran across IRA CDs. I'd never heard of them before, and it's an interesting option, so I thought I'd share about it. You can invest your IRA contributions into CDs the same way you can stocks, bonds, and mutual funds. IRA CDs offer guaranteed returns. That makes them an appealing option for people who want a low risk and steady way to grow their money. It's an option that combines the features of a traditional IRA with the security and fixed interest of a CD. The primary benefit of an IRA CD is stability. Your account value will not fluctuate, and your interest earnings are completely transparent. If you're retired or nearing retirement, this stability can be reassuring. It could save you from having your retirement accounts plummet just as you're needing to use them for income. If you already have an IRA, you may be able to roll your contributions into an IRA CD. That can grow your funds at a fixed rate throughout your retirement. Whether an IRA CD is the right choice for you depends on your priorities and how close you are to retirement. IRA CDs could be a worthwhile option if you're nearing retirement and looking for a safe investment. CD terms vary, usually ranging from 3 months to 10 years. CDs usually offer high rates than savings accounts because they're a little less liquid. IRA CDs are considered one of the safest investment options. This is because they're typically offered by banks and credit unions and are insured by the FDIC or the NCUA up to $250,000. This means your principal and interest are protected from loss due to bank failure. And that's a real concern nowadays. They're good for people who have a shorter investment horizon and are afraid of risk. They are a conservative option. You may want to consider getting an IRA CD if your tolerance for risk is low and you're looking for a guaranteed return to boost your retirement savings while enjoying tax advantages. If you don't like surprises and want to know exactly how much interest your investment will make, a fixed-rate IRA CD provides that certainty. IRAs have contribution limits, and not all contributions are eligible for tax savings. You may want to check with a tax advisor if you have questions. Which IRA CD is best for you depends on your goals. Consider the rate along with other factors. You want to consider the minimum deposit required and the maturity date. Rates vary by the term of the CD. Some banks may offer more competitive rates on 5-year IRA CDs, for example, but not on 3-month ones. Consider your time horizon when deciding the best way to invest. Here are some of the pros about investing in IRA CDs. Number 1, you get a guaranteed return on your investment as long as you don't withdraw from the CD before it matures. Number 2, your money's insured up to $250,000 as long as it's held at an FDIC insured bank or an NCUA insured credit union. Number 3, you won't have to worry about fees unless you're penalized for taking the money out before the CD matures. There are no brokerage fees. Investments usually have management fees, and fees eat into your retirement savings. With the CD, you won't have any of those fees. Yay! Here are a couple of cons when investing in an IRA CD. Number 1, if you're younger, you may want to invest in something with the potential of higher returns. The rate you earn may not keep up with inflation. Number 2, with a regular CD, withdrawing your money early may result in a penalty. We know this. But if the funds are in a traditional IRA CD and you withdraw both before the term is up and before you turn 59 and a half, you may have an early withdrawal penalty from your bank and a 10% tax penalty. Yikes! If you're over 59 and a half and plan to take withdrawals from your IRA, then an IRA savings account might make more sense, rather than paying penalties for withdrawing from the CD early. Not all financial institutions offer IRA CDs, so you'll need to find one that does. Make sure you shop around. Look for institutions that have competitive CD rates and pay attention to minimum balance requirements. I saw some rates as high as 5.75%. Your retirement savings strategy should change as you approach retirement. If you have a significant number of years left to invest, you'll probably want to take more investing risk than an IRA CD has. If you're retiring in the next few years, however, an IRA CD can be a less risky option for investing with a guaranteed rate of return. Before opening an IRA CD, carefully consider your financial objectives. Consider your investment timeline and your risk tolerance. You should also be aware of the fees, terms, and conditions of the specific CD offered by the financial institution you choose. I'm considering this option, but I haven't decided yet. If I do invest in an IRA CD, it would only be a portion of my portfolio, part of bucket number 1. I still want some investments in buckets 2 and 3. I want that growth potential even though it's riskier. I have a video about the bucket strategy that I'll link in the description below. I hope this helped you learn just a little bit more about investing options. The worrier in me really likes the idea of a low-risk, safe way to invest. Risk tolerance is your personal comfort with uncertainty. If you can't afford to lose any money, then you probably have a low risk tolerance. Thanks for joining me. If you found this helpful, please like, and if you're interested in early retirement, consider subscribing to my channel. I'm going to leave you with a quote. Money is a tool, not the goal. Freedom is the goal. Don't forget that. Hope to see you again soon.